Hello, traders. Good afternoon, and welcome to another session here in XM Live. This is the beginner's room. My name is Stanislav Kolev, retail and prop trader since 2012. I'll be your trading expert in the following 1 hour in a session called Better Trader Project. And particularly today in this session, we're going to create the usual cheat sheet for the upcoming events that will take place at 3:30 server time in the afternoon. And this is very well, you know, probably already. That's the non-farm payrolls, unemployment rate, and average hourly earnings. So this is something, this cheat sheet is something that I do very oftenly. Actually, I have to say most of the times where a particular event I expect to have huge impact on the financial markets. And currently, with the Federal Reserve hiking interest rates, I strongly believe that and this is what Fed says, one of the targets there they have is to run unemployment higher, which means that the labor market to go down in order for them to fight inflation. So I don't know what will happen on the event. I have some particular expectations, but I do not know exactly what the event will be. My expectations are, and it's been happening for a couple of months, I have the expectation that we're going to see labor market declining. However, not all of the rate hikes are being already taken place in terms of the economy. So different factors are pointing in the direction of unemployment going up. We don't have it yet. And despite the fact that I have my analysis research, I am not necessarily going to trade my expectations. And you're going to see in the next following minutes how I prepare the cheat sheet for both directions because me as a trader, I would want to make money and generate profits no matter if my analyses are right or wrong. Please, everybody um, who is watching the stream, let me know if you could hear me properly, if you see me also, if you create cheat sheet. I know very well that some of the viewers, Andy and Andrea as well, do that. And I'm going to start with the screenshot of the non-farm payrolls. For people that don't know, yesterday we had significantly significantly strong data on the ADP, which is privately generated report, and we are to see whether today the result will align or it's going to be completely different instead. Average hourly earnings 0.3% increase. This is the expectations. Non-farm payroll expected 225,000 people employed in United States of America, excluding the farming industry, in the last month. This is the expectation. Also, unemployment rate is expected from last time to go down, which means a better employment in the USA. So, long story short, if I have to project my expectations right now and tell it to you, I think that because of yesterday, so significantly strong data that we anticipated on the ADP, I believe that today is going to be more like a disappointment, somewhere around the number or even lower. So I'm going to go 200,000 people here and average hourly earnings zero point 0.2 and unemployment 3.7. This is what I expect. Worse event, red numbers. As I said, however, I'm not going to trade my expectation. That's why I'm going to create the cheat sheet on the different instruments that I look forward to trade. Some of them may be with pending orders. Some of them will be maybe live trading. So you will see exactly the projections here. I'm opening a notepad here, and because I don't know what the event will be, and even the event is positive or negative there, I would rather project it like a strong dollar and weak US dollar. Because the thing is that even you have a good event, the market could react into that into negative aspect and vice versa. And you don't really know how the market participants would react on it. What I'm doing next, I'm opening my platform and I start scanning all the US dollar related instruments that are most likely going to be volatile during and after the news. The first one is Aussie dollar. Just the few words about Reserve Bank of Australia. This week they have under delivered, which ultimately mean that they did not hike 25 basis points as per the expectations. We had a decline on the Aussie. It has been also declining recently. So it's pretty weak instrument. On daily, I don't have much of a vision. 4 hour, 1 hour we have here. So I think this is pretty tradable for both direction. Um, why I say this? Because I could set pending order if it breaks above, and I could also set a pending order if it breaks below. We have an impulse down. The market has been correctively going on the upside, so that means that I have both directional opportunity here, but at the same time, I still will go with the direction with weakness of the Australian dollar. So I think I want to be a seller. How far, since we have an impulse and we're having some form of a rising wedge type of pattern, I think I would wish to sell it if the price breaks below 66.23, which is the problem here is that's only 16 pips from the current price. And we may anticipate this volatility before the event. We're 2.5 hours away from it, from the non-farm payrolls. I think I will give a little bit more room, let's say 66.19 to have at least 20 pips from now. So I want to trade it down here, 66.18-ish, and have my stop loss 30 pips, which means that 0.1 lot is going to be roughly 30 bucks, 30 bucks of a loss if it triggers. Sell stop, gonna modify it, and our stop loss, as we said, is going to be 30 pips, so price 66.18. We add 30 to this, so 0.6648 will be my stop loss. Take profit, I would rather have no take profit of that position and will potentially project it for a swing trade. One of the reasons is that we, as I said earlier, we have significantly weak Australian dollar and um, maybe potential swing trade. There is a lot room on the downside. The previous bottom is like a couple of 100 pips away. So set a pending order, sell stop. Let me know, everyone, if what I'm doing is clear. If it is not, I'm talking too fast, too slow, or just if you have some general question about the market, it could be for completely different instrument. Doesn't matter. I'm gonna abandon what I'm doing and get back into analyzing the instrument that you request. Next instrument that potentially will be volatile. This is another dollar related instrument. This is euro dollar. Let's open the chart. This is how the chart look alike. Very interesting structure. I actually have been presenting that one, but I'm gonna do it again. We have very identical formation that has happened in the past. This was during the COVID pandemic. And we anticipated some form of a flash crash accumulation, market marked up, went up significantly, and it formed left shoulder, hit right shoulder, left shoulder, hit right shoulder. So here, the bigger probability for me will be a downside, and there is actually a very good level for me to short it. Probably will be below 1.0830. How far we're from here? 40 pip, and from the high is like 70 pip. So I want to be a seller, but this could also be good opportunity to buy as well if it goes up. So I'm going to go with both direction. The risks here, hidden risk here, that we could go up, spike it out, take my buy, and then goes down and take the sell. Of course, the yo-yo market is something that you cannot really predict whether it could or should happen. So I'm just going to take the risk and use both directional for the euro dollar. Let's see if it's 0.1. Yes. So I'm going to right click up here, trending, buy stop. And my stop loss, I want to be below this current swing low, which will be like 108.60, which is exactly 50 pip. 108, just a moment. Stop loss, oh, this is 1.0860. Yes, it's done. And now for the sell, I want only to sell it if it breaks down below the major structure low, which will be 108.30. So I'm going to have the pending order sell stop as well. So for euro dollar, both direction. Now let's write it down on the cheat sheet. So for strong dollar, I'm having Aussie for a preference, but also I have euro for a preference as well. I give it a star because I like it a lot. And for dollar weakness, I also have euro. I can give it a star because it also euro has been pretty strong as well. Nozwakazi is also with us. Hello, Nozwakazi. Thank you so much for tuning in. Welcome on board. Good day. Can we check NASDAQ? I'm going straight to that as soon as I finish with the pending order. If you also want to share if you're trading the non-farm payrolls during the news or you go after the news, it's going to be very helpful and useful. So stop loss here, if it breaks down, I'm going to use today's high, which is going to be about 80 pip. Long story short, 100910 will be. And both trades projections will be for a swing trade. Yeah, I think we could have a nice swing in the upcoming days. We don't have much of market events. Yeah, we have inflation after a while, but only at the end of the month we have the Federal Reserve meeting. So potential swing intra-week for a couple of week position could be nice. Checking the Nasdaq right away. Weekly chart, we're at major resistance right at the top. And daily, this have been very exuberant type of move. 4-hour, we could clearly see that we have some form of double top formation. Even we're having an upthrust at the structure. So double top, upthrust. I think I want to be a seller here. And my sell, I think I want to project below yesterday's low. So pending order down below 14,960 with stop of about 150 pip. I'm going to use half lot, and because this is a swing trade, I'm going to use the Nasdaq expiration futures contract. So 0.5, so 15,100 trending sell sell stop. I think the minimum is 1 maybe here. Let me check. Yes, it's 1 here, modifying it. So 15,100, stop loss 15,250. I'm gonna modify this, and you could clearly see I'm having also a Nasdaq potential sell, and I'm gonna give it in the bracket of strong US dollar, US 100. I also gonna give it a star as well. Nozwakazi, also if you want to share how do you see it, are you more bullish or bearish? There is a very strong hype with the technological and artificial intelligence, mostly companies. And Trevor in the chat also from our different streaming platform, which is YouTube. Are we hedging? I say we're not hedging. I suppose you're reverting to the euro dollar. The original idea is not to hedge. The original idea is if we have a very significantly strong or weak data where there is a massive reaction from the current price